Jai Shri Gurudev. Welcome back to my YouTube channel, Janasnehi Edu Help Desk. My name is Ravi N, working as Assistant Professor in the Department of MCom, BGSIMS Chikaballapur. Dear students, through this video I am going to explain one of the problem with solution under fire insurance claims. I have already uploaded more than 5 questions with answers with full explanation that under fire insurance claims. So if you are not yet subscribed to my YouTube channel, please do subscribe and like, comment and share the videos with your friends also. In this video I am going to explain one more problem under fire insurance claims. Let me start with the question. Dear students, concentrate while I am explaining the question. If you understand the question, it will be very easy to understand the answer. Okay, and make sure that you people are understanding each and every point. Okay, each and every question is different. It is unique. Each and every question is unique. So that you have to concentrate carefully and you have to catch what is the difference. Okay, and what difference is there between one question to another question, and how to solve those different questions under fire insurance claims. So you have to keep in mind that, right? Yes, hope you are understanding each and every question and you are satisfied with my explanations. Please do comment if you have any doubts regarding the explanation, regarding a question, regarding answer or whatever it is. Okay, and yes, here is the question. Let me explain. A fire occurred in the premises of a firm on 1/10/2020. See, the fire is occurred as on 1/10/2020. From the following information, calculate the claim to be made by the firm. See, the date of fire is 1/10/2020. See, whenever the date of fire is given, you have to consider the date and you should think that in which accounting year that date comes. In this question, 1/10/2020 is the date of fire and that date comes in a 2021 accounting year. Accounting year 2021. 2020-21. Okay, in that accounting year the date comes. So for that date the previous year is 2019-20. What is the previous year for the question? 2019-20. Okay, so why I am pinpointing the dates in the sense, see, in order to prepare trading account and memorandum of trading account, you should differentiate the information. You have to record all previous year information in the trading account and present year information in the memorandum of trading account. Because of that reason, you should differentiate the dates and you should consider which is the previous year and which is the present year. Okay, in simple way, present year means the date in which fire accident is occurred, and that particular year will be considered as present year, and preceding to that will be considered as previous year. Hope you understand. So in this question they asked you to calculate the claim amount, claim to be made by the firm. Related information is given. Firstly, stock on 1/4/2019 rupees 63,000. See, stock on 1/4/2019. See, this stock is related to previous year. So it should be recorded in trading account as a opening stock because it is the opening balance. Got it? And next point is purchases for the year ending 31st 3 2020. See, 31st 3 2020 rupees 4,17,500. See, year ending in the sense, so it should, so the two, it is related to the previous year. How it is the previous year? It is 31st 3 2020. The date comes in a 2019-20 accounting year, end of the accounting year, so that it is considered and it should be recorded in the trading account purchases. Next point, sales for the year ending 31st 3 2020 rupees 5 lakh. So sales is given, that is no, for the year ending 31st 3 2020. It is also regarding with previous year, so you should record this amount in a trading account. And next, wages. Yes. Okay, so the next point is wages is given. Okay, so wages, the two, for the year ending 31st 3 2020. Wages for the year ending 31st 3 2020, this is for previous year, so you should record this amount in a trading account. So this is in a trading account. Got it? And next point is salary. So salary is given, the two, for the year ending 31st 3 2020. See, whenever the indirect expenses is given in the question, you should ignore it. Direct expenses only recorded in the trading account, either memorandum of trading account. But indirect expenses, if given in the question, you should ignore. Salary is such an expense. So that is, salary is an indirect expense, so that you should ignore it. Nowhere you should take it into consideration. Okay, so don't take it into consideration while preparing a trading or while preparing a memorandum of trading account. Just ignore it. You should not take into consideration this sales part. Got it? Yes. And next, stock on 31st 3 2020. So 31st 3 2020 means it is the closing stock. Opening stock is given here and closing stock is given, that is for the previous year. So you have to record it under credit side of the trading account. And next, purchases. So purchases from 1/4/2020 to the date of fire. From 1/4/2020 to date of fire means it is related to present year, so that you should record these purchases in trading account. Okay, and next one is sales. So sales from 1/4/2020 to date of fire. Okay, so that should be recorded in the memorandum of trading account under credit side. Yes. And next thing is stock salvaged. So stock salvaged means it should be considered as, it should be considered salvaged goods, and you should take it into consideration while calculating actual loss of stock. You should deduct this amount. And next one is value of policy, which means policy amount. So policy amount is given in the question. And next one is, there is an average clause in the policy. Even they have mentioned that average clause is applicable for this question, which means the policy is applicable for average clause, so that you have to apply average clause formula to find out the claim amount. Got it? Yes. And next, the firm had the practice of valuing stock at 20% above cost price. See, every time the company had a practice that the company had a practice here. See, yes. See, the firm had a practice of valuing stock at 20% above cost price. So they usually what they are doing is, so they usually value their stock at 20% above cost price. So we already solved some problems, in case of above stock price and below cost price, is it or not? See, whenever above cost price is given, so 100 divided by 110, 120, like that. Okay, in this question 20% above cost price, so that 100 divided by 120. Got it? Yes. And next, however, during 1920 the policy was changed and the stock on 31st 3 2020 was valued at 10% less than cost. 10% less than cost. Okay, see, firstly they have calculated, and they usually following the method of calculating their valuing their stock at 20% above cost. But now suddenly they changed that policy, and the stock on 31st 3 2020 was valued at 10% less than cost. Okay, so less than cost in the sense you should do deduct from 100. Okay, that is 100 divided by 90. Okay, 100 divided by 90. So whenever above cost is given, 100 divided by 100 plus. If below cost is given, so 100 divided by 100 minus. Got it? Whatever the percentage, that should be added and deducted. Got it? Yes. So this is the question. So in this question, what you have to do is you have to find out the claim amount. Okay, shall we go with the question, answer? Yes, sir. Yes. Next, we'll go with the steps. See, hope you understand, hope you know the different steps, for the calculation of insurance claim amount. Is it or not? Yes. See, in this question, we have to follow totally 5 steps. So even in fire insurance claims we have a 5 steps only. Okay, so that is step number 1, preparation of trading account. Step number 2, gross profit ratio. Step number 3, memorandum of trading account. Step number 4, calculation of actual loss of stock. And step number 5, calculation of claim amount. Okay, so now we'll go to step number 1. Okay, let me explain step by step. Step number 1 is preparation of trading account. Here is the trading account. Trading account for the year ending 31st 3 2020, or trading for the year 2019-20. Okay, see here, so how you have to record in the sense, so one by one you have to record the items. Firstly, opening stock. Opening stock 52,500, but in the question they have mentioned 63,000. Then how comes 52,500, sir? That how comes in the sense, see here 63,000 is the opening stock into above 20% cost, that is 100 divided by 120. If you calculate like that, you will get a 52,500. Then so you have to record purchases, that is 4,17,500. Next, wages 20,000. And next you have to record sales 5 lakh is given. And next you have to record closing stock. So closing stock, it is 81,000, and below cost price 10% below cost price, so that 81,000 into 100 by 90, so we got 90,000. Okay, afterwards so you have to total it. So 5,90,000 5,90,000. So 5,90,000 is the highest amount, comes under credit side. So you have to write both the sides, right? And then you have to deduct the debits from the total, and you will get 1 lakh rupees as a balancing figure, and that balancing figure is gross profit. Hope you understand. So gross profit is 1 lakh rupees. Yes. And next we'll move to the second step. The step number 2 is calculation of rate of gross profit. So you people know the formula. So the formula is rate of gross profit is equals to gross profit divided by net sales into 100. This is a formula to find out the gross profit ratio. Okay, yes. So here 1 lakh is the gross profit. See, 1 lakh is the gross profit, which is calculated in step number 1. 5 lakh is the net sales into 100. If you calculate, you get a 20% as a gross profit ratio or rate of gross profit. Hope you understand. We'll move on to the next step. Next step is preparation of memorandum of trading account. See, memorandum of trading account used to prepare to find out the closing stock or stock on date of fire. Okay, so whenever the stock on date of fire is unknown, you have to prepare a memorandum of trading account in order to find out that stock on date of fire. Okay, so here how we prepare. So here memorandum of trading account from 1/4/2022 date of fire. Okay, so this is for up to date of fire. Yes. And memorandum of trading account. So how you recorded? See, firstly I have recorded opening stock, that is 90,000. How comes this 90,000? Previous year's closing stock will be present year's opening stock, which means previous year trading account. So we have recorded closing stock as a 90,000, so that for memorandum of trading account, so it will be the opening stock. Okay, so same is carried down. And next purchases 2 lakh, wages is not given, so that mentioned nil. And next sales, gross profit is to be recorded. So before that you have to record sales. So sales 3 lakh, then you have to calculate gross profit. Okay, so 3 lakh rupees into 20%, we got 60,000. So if we total it, so we got 3 lakh 50,000 as a total highest amount. We have recorded both the sides, and if you deduct that amount, you'll get a balancing figure 50,000, and that should be considered as stock on date of fire or closing stock. Okay, hope you understand. And next we'll move on to the next step, calculation of actual loss of stock. Okay, so in order to calculate actual loss of stock, you have to consider first stock on date of fire, that is 50,000 is given, and less salvaged goods. Salvaged goods, it is also given in the question, that is 10,000, and if you add fire extinguish expenses, 0. So next you will get a actual loss of stock, that is 40,000. So it is very simple. So first you have to consider stock on date of fire, next you have to deduct salvaged goods, and then if it is any fire extinguish expenses is given, you have to add that, and then you will get a actual loss of stock. So for this question, actual loss of stock is 40,000. Next we'll move on to the last step, that is ascertainment of claim amount. So in this step, so you have to apply average class formula. Why? Because they already mentioned in the question that it is applicable for the average class. Average class is applicable. Policy amount is given. Actual loss of stock we calculated. Stock on date of fire also we calculated. Okay, yes, if we apply the amounts, okay, so here 30,000 is the policy amount into 40,000 is the actual loss of stock divided by stock on date of fire, that is 50,000. So if you calculate, you'll get a claim amount, so that is 24,000. So 24,000 is the claim amount. Okay, see here, very simple. The formula is claim amount is equals to policy amount into actual loss of stock. Okay, if we apply that into an amount, if we mention an amount as a formula, you'll get a 24,000. that is claim amount. Okay, so hope you understand. This is how you can calculate the claim amount under fire insurance claims whenever the average class is applicable. Got it? Yes. Okay. uh, if you have any doubts regarding the question and answer, please do comment in the comment section, and as much as possible share the video with your friends, and if any teachers are watching this video, please do share with your students. Thank you all. Jai Shri Gurudev.